Good morning and welcome to the VSA Morning Miner. It's Wednesday, the 19th of April. I'm joined by Paul Rankin. Paul, how are you today?
I'm well, thank you. How are you?
Yep, all good, thanks. Quite a bit more news than yesterday, so let's dive straight in. Q1 results from Antofagasta. What are the highlights there, please?
Yeah, we have Q1 results out from Antofagasta. I would say it's a relatively mixed set of numbers back from them. My concern, I guess, is whether or not they really are going to have control of things with cash costs. They did estimate that they have increased here on cash costs at 2.49 a pound, which is for the quarter, which is 6.4% higher than a year ago. And compared to the prior quarter, the cash costs is up by almost 25%. Part of this is due to lower copper volumes being produced, but the Chilean peso has also improved as well in relation to the US dollar. Gold production for the company was at 42,000 ounces, which is about 10% higher, so that helps offset some of that. But it is lower than by 25% than in the prior quarter, and that's because of scheduled maintenance issues. So we hope they'll be able to regain that push in gold production as they go further into the year here. Copper production was in line with guidance, 146,000 tons, 5% up on the same quarter of 2022. But again, well down on the last quarter. Again, those maintenance issues playing out on some of its operations. So we'll see if they can recover their margins here in the next two quarters.
Yeah, all down to water availability and lower grades in the mine plan, but as you say, they are guiding to higher production through the next couple of quarters, and none of the guidance for capital expenditure, production, or cash costs have been changed for the full year. But obviously, starting from a low base, so plenty of work to do to reach those targets. There were some numbers out from Row Motion, Paul, yesterday that you were quite interested in.
Yes, that's right. Row Motion, the consultancy on battery raw materials here with the offices in London and elsewhere. Interesting piece here. They actually put some numbers around what exactly will be the battery plant capacity challenge facing the USA under the new Biden EPA targets for EV uptake, as the US government announced late last week. The number that flashed out at me was the light-duty vehicle battery cells capacity will have to rise domestically to 2.7 terawatt hours annually by 2032. Again, that's annually by 2032. I did some looking about here, and that's 170% higher demand than what was just forecast back in January by the government itself. And it certainly means that there is a very robust market in North America then for anything, any kind of a lithium deposit, and particularly a U.S. one that would be eligible for that financial and permitting assistance under the Inflation Reduction Act. But I guess I have to say, yeah, lithium is one thing, but what is this is hiding in the background is the more problematic issue of reaching these targets, and that's there just isn't nearly enough graphite, battery grade graphite, in order to meet that demand at the moment.
Okay. Trading update from Hummingbird Resources as well. They've announced production for the quarter of 27,262 ounces, so that's slightly lower than Q4, -4%, but significantly higher than Q1 last year when they were having production issues. So as a result, the all-in sustaining cost of $1,109 an ounce has dropped by more than half year on year, but it has also decreased by 11% Q on Q. Given that the production numbers are slightly lower, the grades are slightly lower, and tons are slightly lower, it does look like most of that reduction in AISC has probably come from lower capital spending, although in this trading update, I don't think the split between cash cost and AISC has been broken out. Nonetheless, though, it's still a significant improvement on what's happened in the previous quarters. That said, they're still guiding to 1,500 as an average for the full year, so looks like there might be some higher spending in the quarters to come, with guidance still of 80 to 90,000 ounces for the year. Carusa still on track. Mining started and first gold pours due for end of Q2. Share price has increased quite significantly on the back of the gold price going above $2,000 an ounce, but it's still some way from where it was previously and still at 70 million market cap. If they can achieve the full year targets, then that looks fairly cheap still.
Yes, and I think investors are really hoping that this Caruso development will mean a end to the operational challenges that Hummingbird has always been struck with on their earlier mines in Mali here, because it should turn the company around very nicely if it isn't operationally challenged on the new mine.
Yeah, well, support from that new shareholder should provide some comfort and some breathing room there as well. Anything else, Paul?
Real quickly, just to say ASX listed explorer for lead zinc Rumble Resources has put out a maiden mineral resource estimate for its Irahidi zinc lead silver project in West Australia. It comes in at 94 million tons, grading 3% zinc plus lead and 4 grams silver per ton at a zinc 2% cutoff. So it is one of the largest recently found sulfide lead zinc deposits around the world in recent years, but not by no means the only one. And they still have quite a bit of ground yet to drill test along this favorable horizon of sediment or strata form mineralization. So we'll see how it develops as it goes ahead.
Okay, good stuff. All right, thanks very much, Paul. We'll be back tomorrow.
Very good. See you then.